focus. Ideate, innovate, enable. DBS Bank and Money Control present Small Business to Smart Business.
Hello and a very warm welcome to Money Control. We are on the last episode of Money Control's video podcast series From Small Business to Smart Business. This series, in association with DBS Bank, aims to provide the MSMEs with useful insights to solve evolving challenges as well as lead them in the direction of growth. And today we'll be talking about an exciting and significant topic on the Indian startup ecosystem, catalyzing India's decade to $1 trillion digital economy. And for this, we have some of the biggest voices from the tech and startup ecosystem. I have with me Saurabh Srivastava, Chairman of Indian Angel Network and co-founder of NASCOM; Rajneesh Kumar, Chairman of BharatPay; Sushant Shetty, Senior Vice President and Head, Channel Liabilities Institutional Banking Group of DBS Bank India. Thanks a lot, everyone, for joining us. Let's dive into the topic right away. So, first off, I want to throw this question to all our guests here. Maybe if we can start with Saurabh and then we can ask all the others too. So, we all know that India is aiming to be part of the $5 trillion club in a very few years, as well as reach the 1 trillion digital economy too. But what role, according to each of you, does startups play here, and how significant are their contributions? I mean, this will kind of help give us a sense of where exactly are we in the journey towards achieving the $1 trillion digital economy too. Saurabh, do you want to go first?
Well, startups are fundamental. They're not important, they're fundamental for us to get to $1 trillion digital economy. I think most of us forget that the first startup industry was IT services, and in 30 years, it's moved from $55 million to 250 billion, accounts for 25% of our of our forex income, employs close to 10, 12 million people. And very importantly, as a result of that, we have now become the largest pool of tech talent globally and also of entrepreneurs. So, if you look at what the government has done in a brilliant way, the digital public goods, all of that, I think startups have been at the hub of it. And you just have to look at the US and Israel. These are good examples of how startups leveraging tech and innovation have led their country's economic growth and employment. And we are in a very good position. We slipped globally because we missed the industrial revolution, because we were colonized at the time, and our GDP went from like 25% to low single digits. Global share of economy, went from 25% to single digits. Today, we are at the top of the new revolution, which is the innovation revolution, the tech revolution, the startup revolution. We rank number three. I think by 2047, uh, we should be in the top two, if not at the top, and it will be led by startups. So I think startups have the single most important role to play, and that is why I'm so happy that the government is focused on it. The Prime Minister, Mr. Modi, is leading it from the front, and we are already outpacing China in creating the number of unicorns. 100,000 startups from barely a few hundred 7 or 8 years ago. So startups are beginning to play their role. All that you're seeing in terms of UID, UPI, all the rest has come because the government and startups are working together and really creating a scenario where I have no question that we'll be $1 trillion digital economy before we actually have pitched ourselves to becoming one.
Rajneesh, do you want to add to this?
Also mentioned that is very appropriate, and startups is the new buzzword, and we have seen that how much contribution they are making in improving the productivity of the Indian economy in particular. And that's why even in G20, you will find that Delhi Declaration specifically mentions about startups. So currently they may be contributing about 2 to 3% of Indian GDP, but going forward, their contribution is expected to go up to 5 to 6%. So if it is a 5 trillion economy in 3 years' time or 4 years' time by 2027, they will be contributing about 250 to 300 billion in that. And it's all about entrepreneurship, it's all about new technology and how that technology is harnessed not only to unleash the forces of productivity but also to solve many situations and provide solutions to the consumers and public in general, which otherwise have not been provided by the legacy institutions and the companies. So that is the importance of the startups and their potential to employ people. That is also there, and it does promote entrepreneurship in a very significant manner.
Shushant?
Yeah, I'll just add to it. I think as what was already covered was that the startups play a very startups is a word, right? Today, what we call startups tomorrow will turn out to be BAU industries and businesses by themselves. But the kind of platform that's now been created for the startups, we actually they are basically more inclusive. We are looking at startups today to take us to markets where normal regular businesses didn't go. So startups are playing a big role, according to me, in two parts. One is digitizing the entire and creating more efficiency in your regular businesses. Also, their ability to go deeper into India. What I have seen working with a lot of startups is their activity in tier three, tier four markets, which technically, older businesses didn't go into or didn't go at that pace, is what we see startups propelling into. The efficiency they've been able to create in the system, whether it's banking or regular SME businesses, is again adding to the fact that we might reach certain milestones much earlier because they are going to propel these businesses forward in a much faster way. So yes, if there's a milestone set, I think we'll reach it earlier. A few case in points would be the progress we've made on payments, the progress we've done through UPI, the progress we are making in digital loans. There was India has a very large unorganized market of where lending happens. They are cutting that market down. They're making it easier for banks to go out there and make assessment and put the money out for businesses to grow. And the best thing is all of this is extremely well supported by the current infrastructure and the government. Of course, people will say there's more stuff to do around startups and how we can, support them, but their initiatives are already in place. And the most promising things about the startups or the young entrepreneurs right now is that the mindset that they bring. So this next phase of Indian growth will be led by the change in mindset that these young entrepreneurs bring onto the platform, and that's why we think the pace of this growth will be really exciting and really at a good speed out here.
Great. Thanks a lot, gentlemen. I think this kind of sets the tone for our entire episode. Very optimistic, right? I can't be without asking this. I mean, under India's G20 presidency, there was a startup task force which was established, and one of the big wins I would call is the establishment of Startup 20 engagement group, right? Which will continue with other presidencies as well from now on. Now, how significant is this for startups and how should they basically tap this opportunity? Maybe Rajneesh, do you want to take this?
Yeah, so as you have mentioned that in G20 there is a specific declaration and that is called Jaipur Initiative. And the whole idea is that it recognizes the importance of startups and MSMEs and their contribution to the generation of employment and improving the productivity of the economy. And with the renewed focus on the startups and MSMEs, they have used this word interchangeability and in one. And the importance of MSMEs have always been recognized by the fact that they generate very high employment and they encourage self-employment also in a big way and they are job creators rather than job seekers, which is very important for a country like India, where the addition to the labor or the workforce every year, the number is fairly large and huge, and everybody cannot be a job seeker, and that's where the importance of startups and MSMEs. The problem with the startups or MSMEs has always been the access to information and the access to the credit, which has also been debated and deliberated upon for several years. But now a major change which is happening is availability of information because of the technology. Today, the flow of information about the GST data, about the income tax return, credit history, payment history, so much data is available. And based on that data, the new models of underwriting have emerged, which is improving the flow of credit to the MSCMEs and the startups. And then for startups, we definitely need light touch regulation, easy compliance burden, and easy or friendly taxation regime. These are some of the preconditions which are also required if the small scale or medium enterprises and the startups they have to flourish. So these are the issues which have been brought into focus, and going forward, hopefully there will be some concrete action points on all the issues which are being faced by MSME and the startups.
Got it, got it. That's great. Saurabh, do you want to add very specific to how this will open, the grounds for many startups going global? Given that, they will get access to multiple countries, do you think there will be some change out there?
Well, I think in terms of uh, growth, let me add one point to what Rajneesh said, which is important. There's a study done in the US by a very respected foundation, the Kaufman Foundation, and they found over a 40-year period that except for 6 or 7 years, net new job creation came only from startups, companies less than 3 years old, not from government, not from large enterprise. And therefore, this becomes very important for India, but also for the entire G20. It is very important because jobs are a big issue today. And the second part is that if you look at startups even in India today, quite apart from their own market cap or revenues, the fact is that they are seeing some of our biggest challenges in India, which is affordable healthcare in the remotest areas, high quality education in tier two, tier three towns, agricultural productivity, all of these things. Our startups today are leveraging innovative business models, they're leveraging the latest tech, they're bringing in space tech, AI, and they are creating solutions that are seeing these challenges as opportunities. So it's very, very important. And as we look at expanding, when our startup industry builds these solutions, these products, the market, of course, is India. It will have huge impact on India, the quality of life, on the economy, on GDP. But the entire global south would benefit from this because many of those solutions are not a priority in the developed world and therefore would not have been developed there. But we have this one advantage. We have these challenges on scale, and we also have world class entrepreneurs in India who can and are solving them. We have access to capital, we have developed and have access to the latest technologies. So we are very well positioned to do this. So getting onto the G20 agenda will only make it much easier for other countries to look at engaging with us on many of our products and solutions. Because today, if you look at our startups, they are very well connected and engaged with the US, for example, and many parts of Europe, but not so much so with the global south. So I see some distinct advantages that we can get from this.
Now let's move on to understanding some trends here. I mean, to get in the concept of decade that we're all talking about, just for our listeners and viewers, decade is the term coined by our Honorable Prime Minister Narendra Modi, which basically is the decade that's filled with technological advancement in all areas of growth. And startups basically stand at the forefront of making this happen. Like we've just heard from all the experts here. But now, what are some trends that are emerging? Like Rajneesh, Saurabh, we spoke about DPI, we spoke about AI as well. So what are some emerging tech that is defining and shaping the next decade? Maybe we can start with Rajneesh and Saurabh can add in, and then Sushant, if you can help us understand. I mean, if you can also add into some of these trends and how DBS is kind of supporting these emerging technologies. Rajneesh, do you want to go first?
Yeah. So, as you have mentioned and broken the piece, that decade means technology and 10 years of technology. So, what we experienced also in last couple of years, that based on the digital public infrastructure which has been created in the country and the GEM Trinity, which is Jandan accounts opened by the bank for the financially excluded people, Aadhaar, which is the identity, and mobile. So, with this, India has made rapid progress, and it appeared in the news also that World Bank has said that what India has done in 6 years, it would have otherwise taken 47 years to achieve this. So, this is the power of technology where you are trying to solve a social problem, or rather a socio-economic problem, where technology it can enable you to cut down on the time taken to achieve a certain objective in a very short period of time. So if what could be done in 47 years has been done in 6 years, so if it is 10 years now, so obviously we would be doing what could be done in 70 years. So that is the calculation. And the pace of changes in the technology is also huge. Now, so much development is taking place, whether it is in the, I'm talking particularly about the financial ecosystem. We have the digital currency, which is now all the central banks globally. They are taking the lead, and our own Reserve Bank of India, they have made significant progress in introducing CBDC. That is just one example, but whether it is healthcare, whether it is tech, there is no aspect of an individual's life today which is not touched upon by the technology. So technology is all purposive, and the trend is also that new technologies are emerging, and the pace at which the change is happening is also never seen before. Keeping pace with these changes also in itself is a big challenge for everyone. But because the India under the Prime Ministership of Narendra Modi ji, so from the beginning, if we see from 2014, delivery of public services and goods, the entire emphasis has been on the technology. We have seen in the financial sector, we have seen in the health sector, we have seen in many other fields, and there are many fields where technology is still not used as much. So, for example, in the say, for example, digitization of land records, it's moving at a very slow pace. If that uh, is speeded up, then the doing the transactions, say for example on the mortgages or bank lending, there will be so much ease of doing business. So this is something which on which one can speak on and on. And I know you will be having a time limitation also. But what I'm saying is that we are at a stage where the possibilities are infinite. And how do we exploit that? We have tasted success in many fields, and based on that success, obviously, there is an encouragement, and the development which is going to happen in India and across the globe, it is all technology led. How do we harness it, and how do we harness it for the public good? That will determine our future.
Great. Saurabh, do you want to go into some specifics as to what is very few interesting tech that you've come across that you think would define the next decade?
There is some fantastic tech that's being created in India today. Our startups are doing stuff that, even a few years ago we would not have imagined. Let me give you some examples. Now, environment is a big issue, sustainability is a big issue. Now, we have this company called Pool in a in Kanpur, not in Delhi or Bombay or Bangalore, which actually is creating not only charcoal free incense and essential oils, but also leather from these flowers that are wasted after they're put in temples, thrown into rivers. They are toxic, and while doing so, the employment is all to women in villages. Now, this is going to be the world leader. It's already a company that's been globally shortlisted to be amongst the winners of a very, very unusual prize called the Earthshot Prize. Uh, it would have been unimaginable. You have, for example, if we look at healthcare, now we have a company which started out in Bangalore uh, called Pandorum, and it's creating bioengineered cornea and liver. And cornea, the issue with corneal blindness in India is huge. And this is a company that's already made huge progress with it. We have companies in manufacturing today because when we thought of startups, we only thought about internet and SaaS and those kind of things or quantum computing. But here's a company that's doing manufacturing. It's aiming to be the Siemens of India, making world class products like ventilators and other products for the ICU. It's called Nokark. And it's basically looking to sell them within India. It's already selling them in Africa and it's looking to go global with it. There's companies that are combining AI with what they get from space technologies, information from space, to be able to assist farmers with cropping patterns, assist governments when crops are damaged in terms of how they should pay. We have a space tech company because government now allows that to happen. So we have companies that are in the space technology. And there's this company called Dhruva that's already sent, I think, 7 or 8 satellites into space. So our startups are setting the pace for a decade.
Great, great. Sushant, if you can come in here, we hear of such incredible developments like Rajneesh pointed out. What would have taken 47 years with the use of tech, it's just taken 6 years, right? But what kind of support does DBS given to feed in this kind of development? What is needed? I mean, apart from that, if there are any other key trends you want to add, please do go ahead.
Yeah, sure. So I'll just add a couple of things in terms of maybe trends and just take a step back and for whatever's being able to happen right now, there's been a lot of back work. So I think the first credit should go to the fact that how in the last few years we've made internet access so easy for everybody. People now have smartphone. Uh, your entire broadband is so affordable, and that has enabled startups to go deeper and wider into the Indian markets. I think a lot of base was created for the startups to go and kind of get into all kinds of things, like sir mentioned, right from sustainability to agriculture to various forms of industry. I think it was because of the digital penetration and the work that happened, uh, was the absolute enabler for us to get there. Similarly, so you also mentioned Fool. I'll say that some of the stuff that we do as enablers. Fool was one of our earlier companies which we have invested through our grant program. So what we do for startups, I'll give you a couple of examples. We run a DBS Foundation program in Singapore. It's been running for the last 7 to 8 years. Fool is also one of the recipients of that, where we look at startups who are focused on sustainability or some kind of social causes but are run for profit. We run this every year, and this year we had the maximum applications coming. Though this is run from Singapore, we had 1,000 plus applications coming in from the Indian ecosystem of startups, and this is the highest ever that we've seen in terms of applications going in for our grant program. The grant program not only provides the early stage funding, 90% of our grant awardee programs are still functioning, profitable, and doing well. So the selection process is also good. Apart from that, there's a lot of stuff done around mentorship, taking them to newer markets, exposing them to some of the startups in the regional markets that we are present in. The other impact that we do for startups is we run our own cohort of programs across India. We call it DBS Founded. We do these reach out events in all cities, right from Hyderabad, Chennai, Bangalore, of course, Gurgaon, and also take it to smaller cities where we get cohorts of startups, VCs, investors, ecosystem influencers who can only enable startups to grow to the next level. Trust me when I say this, we do not speak anything about the bank in these events. We only ensure that these events are curated for the city that we are entering into, and these events then become enablers for the larger startups. And each of these events have around 120 to 150 startups from there that come in. We're also working very, very closely with state-led startup organizations like Startup TN. We've got a place within Hyderabad where we sit and work along with the startups in Hyderabad as well. And one very, very simple thing I would say, what we do is uh, we create a platform for them to hit the market earlier. So what we've done is with partners who again coincidentally are like startups only, like India Filing, we've gone and put incorporation free of cost. So if you are a startup, you want to incorporate your company, you're a student who wants to incorporate your company and go live, we ensure that there is absolutely no cost for you to go ahead and incorporate your company, and your next 2 years tax filing, GST returns, etc., are all taken care of. So we've created something what we call as beyond banking. You'll get the regular banking suite for a startup, but you'll also get enabled services, because over the last 2 years, when me, my team, and the bank engaged with this ecosystem, we realized that they need a lot of support, which goes much and far beyond just banking. So we provide a lot of that, which could be through HRMS services, through ESOP management, getting in partners who again are startups in some form or shape to kind of go ahead and support these startups. So I spoke about grants, I spoke about beyond banking, spoke about platforms that we are creating where they can come, interact, and kind of meet the right people to grow their business further. But the last thing I'll tell you, what we do best, what I feel we do best. Banks are normally considered that we go out there and lend money. What we do is we work with a lot of partners at a strategic level. We give them a platform to kind of access the customers we have with it. And I think those are the partners that actually see the real benefit. We take them to our individual customers, we take them to our SME customers, and these are customers where normally they would not reach out to. So we've created a platform called for our partners, where we actually push them to our existing customers, do small events. So if there's an ONDC on the anvil, we work with Go Frugal, who's on the seller side of the platform. We are doing small micro events in small areas and talukas across India to kind of reach out to people and show them how they can list themselves on ONDC, and be more meaningful, make more profits on that platform. So small education series across countries, not just the major cities, is what we are focusing on to ensure that both the MSMEs as well as the startups kind of benefit from what's happening right now in the country.
That's great. That's actually very encouraging. I'm sure many founders who are watching this, listening this, are taking a note of that. Let's now move on to our next segment. We have to talk about the ecosystem as well, right? But the trend that we are seeing right now is very different from what it was, let's say, 5, 10 years back. I'm sure Rajneesh, you'd be able to chip in here. Can we compare the ecosystem change? How has it been? Has it become more enabling or has it become more challenging now? What are some distinct changes that you're seeing? This could probably help new age founders who are just, planning to start up.
My response to this would be that there is an action on both sides, in the sense that on the one hand, there is a positivity and new enablers are being created, and the best example is digital public infrastructure. And on the other side, the challenges are also emerging on regulatory front, taxation front, compliance front. What I've seen also is that, and all of us has observed that there was a time when there was a lot of euphoria around valuations and capital was flowing in very easily. But in last 12 months, that has changed completely. So at one point of time, it was all numbers around growth and new things like GMV, and they became the basis of valuation. Not anymore. Now the trend is about talking about what is the corporate governance standard, when will the company will be in profit. So that is one shift. Second is that everybody wants to promote innovation, but at the same time, there is a certain risk aversion in this system. And that risk aversion is flowing both from the regulators as well as on the taxation front also. There is all sorts of informations in being sought after and are being called for. So I think there is a little bit of a confusion in the system that whether we want to rein in the startups and be the same bureaucratic and same approach as far as regulation, taxation, government policies are concerned. And on the other end, we are seeing a lot of positive noises around that we need to promote innovation, we need to encourage startups. So I think this will continue, and the startups also will have to learn to live with this apparent contradictions. So this is my I would say this is some sort of a summary of what the situation look like.
Definitely. I mean, moving from growth at all costs to complete cost cutting and focus on profits. Maybe Saurabh, if you can come in here, what do you think the pressure on profits? Because every investor today wants to see a clear path to profitability, right? For good reasons. But is it curbing innovations in any way? What should startups kind of? How do startups view this, according to you?
So, firstly, let me tell you that when I built my first few startups, and when in IT services, and when Narayan Murthy and so many others were doing it, we had very, very difficult conditions. There was no debt, there was no venture capital, no angel investing. So we had no choice but to grow on the strength of our earnings. Did it stop us from innovating? No. In fact, we had to innovate to survive. And so we created an industry today which is bigger than any country except the US. So I don't think it's just a capital issue. Today, things are much easier, very much easier. The government is very supportive. Of course, as Rajneesh said, I think particularly on the tax side, revenue authorities have to take, to my mind, a more balanced view about how they deal with startups. And there are many issues, of course, that they have which are of concern. But it's better to use a scalpel than a sledgehammer to solve those, because we don't want in any way to discourage the startup revolution that is starting out. But now you were talking about capital. I think the worst thing you can do to a startup is give it a lot of capital. because that is when inefficiencies creep in and there's pressure on startups to show revenues at all costs. As we have seen, there are many founders which actually become unethical, begin to uh, recognize and state revenues differently. And I'm not even talking about frauds where people take out money. I think at the end of the day, if you're building a business and you don't plan to make a profit, then you're not building a business. A business is a business if you have a product or service that people want and that people are willing to pay money to buy, and you can make a profit at that price. Doesn't mean you have to make a profit on day one. Doesn't mean you even need revenues on day one. After all, even the old manufacturing industries would build a plant, machinery, hire people. It would take years for them. But the business model, the unit economics were clear. The business was meant to be profitable. And I think the bit of the balloon bursting that we have seen, I personally think it's good. It will make startups focus on the things they need to focus on. They'll focus more on innovation. They will no longer have the luxury of thinking that just spending a lot of money will solve all their problems. It never does. And I think I would say, a much more set of resilient, innovative, and high quality companies will emerge. That is not stopping. At the angel investing level, there's no slowdown at the kind of companies we're seeing, at the kind of ideas they have. And there is no shortage of capital for companies that actually have a solid proposition, even today. But yes, if you're building a company where you were just going to ramp up revenues and your losses would ramp up faster than your revenues, uh, funding for those kind of companies is a problem.
Got it. So basically, innovation and profitability should go hand in hand. It's not something that should be looked at separately. But Sushant, do you want to chip in here? I mean, we are now seeing businesses that should be innovative as well as profitable and be a scalable business. So how can DBS Bank's expertise kind of help the startups achieve these objectives?
So yeah, a couple of things. One is I agree that there is no dearth of capital right now. Startups in itself have become like an asset class for banks or for investors to go out there. So we never heard of angel investors 7 years back or 10 years back. Very small, even if you heard, they were hardly limited. But now each city has their own angel investing team, and like Saurabh sir mentioned, there's no dearth of those. There are those people who are sitting on money wanting to invest in ideas and in innovations. Banks too are trying to figure out new and different ways to kind of go there and kind of enable startups. Okay, bank again, we don't have the kind of capital where we can just throw out money. We have depositors' money, and so it's slightly more responsible in terms of where we go ahead and put our money. But just to give you a flavor, DBS has launched its own debt fund. We call it Evolution X along with Tamasek. It's a $500 million debt fund which we've put into place, which looks at a certain series of, after a certain series fundraise to come in and support a startup. This is not purely on profitable balance sheet. This is not purely on last 3 years profitability. It's purely looking at investing in that. We've set up shop in India to look at startups within India. It's a Singapore-based fund, but we are also looking largely at the India ecosystem for investing in that. Grants, I already mentioned to you, we're putting money out. The grant is also now planning to be an LP in an equity-led program looking at social enterprises. What we also look at doing is alternate forms of lending to startups. So if you are platform heavy, you have a lot of customers that come onto your platform, you have a lot of data, we technically go ahead and lend basis that data on your platform, thereby creating some kind of value, some kind of GMV onto the platform itself. We also look at doing a certain amount of bridge funding when it comes to startups. So there are various means and shapes and forms that we've typically come in and kind of supported startup from a lending perspective, whether it's a grant or whether it's also going out there and lending to the players on their platform as well. So It's quite an interesting phase. I think we're figuring out various ways to kind of crunch data. Few things which will come up, can't speak a little too early, but few things which will come out in the next few months which will actually surprise people. We're not going, we are trying to move away, absolutely move away from the traditional forms of lending, figure out new ways, use data better. Again, working with some startups to figure out how can we crunch data, go away from the traditional form of lending, and actually put money out to young entrepreneurs who do not have maybe a very long credit history to show for. So that also is in the works.
Great, great. Thanks, Sushant. Now, I think we are moving to the last segment, but it's very significant that we should talk about it. The challenges, right, that today's startups face, and very specific. Saurabh also made a remark about governance issues that are coming up. In fact, Rajneesh, in your book, The Custodian of Trust, a banker's memoir, you had highlighted about how startups need to earn the trust of literally everyone, right, in order to survive. So we are also seeing many instances of governance lapses. Is this a challenge coming out of the pressure, or what's causing this, and how should we view this? Rajnish, do you want to take this?
So the about the corporate governance, the issue is around that the pace of growth, and along with that, the changes in the governance structure of a newly incorporated company. So what my observation is, and it is based on all the experience at Bharat Pay and many other startups, they started small, and there was a governance structure which was appropriate for when a company is being operated by 5, 10 people. And then there was a period when the growth was very fast, exponential growth. So number of people which were working, instead of 10 people, it would have become 500, 700. The revenue manifold growth. But the way companies were being governed, there was no professionals to handle finance, critical functions like HR, compliance, internal audit, because the founders or promoters who were all young entrepreneurs, they did not have, in fact, any idea about how a large or a mid-sized corporation needs to be governed, and did not have enough experienced people to guide them through that process. And that led to so many issues which came to surface later. So the learning from what happened in the past is that when a company is growing, and this is not about only startup, I have seen it as SBI chairman also many mid corporate companies that they suddenly grew very fast without paying enough attention that how are they being managed. And then there came a stage that they started to falter. And this is my, in fact, advice to if people are watching or young entrepreneurs are watching this program is that the governance has to move hand in hand. If you are 4, 5 people, you can't afford a very large team of professionals to do the job for you. It's all right. If the 4, 5 people, 10 people, they manage their affairs. But if you're on a high growth path, then start putting in the governance structures in place. It costs money because when you hire professionals, you have to pay them. It is not a like cheap option. So on the one hand, you will have pressure to show performance on the profit front. You would like to cut down on the cost, but at the same time, the cost of not complying, not governing it well, it is much higher, and those consequences everybody should be aware. So, my assessment of this situation is that in some cases it could have been an intentional thing where the promoter's own value system would have been very weak, and they could have become greedy, but not all of them are in that category. Some of them are and were very well intentioned people, but there was no one to guide them on the basic principles of governance. The mix at the board level was also that they were all young people, even the investor nominee. Uh, I doubt they had any hands on experience of being part of an organization which had good governance policies and structure. So it was lack of guidance, lack of experience, and in a few cases, it was intentional.
Got it, got it. That's helpful. Saurabh, very specifically, I mean, you speak to a lot of startups on a daily basis. So, what are some other challenges that they're pointing out, and what role does NASCOM and other industry bodies and the government as well play here? I know we speak about self regulation a lot, but should there be any standards for startups to follow, in order to achieve global standards as well? So, if you can just add more to this.
The kind of instances of poor governance that have happened in India are not unique to India. They happen everywhere. So it's not as if there are global standards and we have Indian standards that are not good enough. I think the issue really, and I have stronger views on this, having done startups myself and having been part of an industry where in 35 years of a $250 billion industry, the number of issues of poor governance or fraud were barely a handful. I think there are two things. Firstly, we are investing in youngsters who have never run a profit center, never run a company. So there is a responsibility for at least the early stage investors, certainly the late stage ones too, to give some guidance and create some mechanisms that as you invest, you have a mechanism for quarterly board meetings, some audits, largely to make sure that these youngsters understand what is right and what's not right to do. So partly, and Rajneesh mentioned to that, it may be it's not that people are being deliberately unethical, but they don't know better. That's easier solved by giving them those guidance directions, and investors should do that. But remember, at this early stage, when a company raises 1 or 2 crores, it's not going to have great professional boards or anything. So you have to have a different set of mechanisms to mentor and monitor. That's helpful for sure. I think the challenge comes when the get rich quick idea, the looking at a number of investors who made it fast, and and being under too much pressure from investors who've given them money to just show good results, there are founders with poor value systems which actually begin to go astray. There is really no excuse for that. I think when a fraud happens, we should take it very seriously. We should create an example of it. We shouldn't celebrate it. Uh, we do have cases of founders who have had very poor ethics and are almost celebrated. We shouldn't actually have that. The second part, of course, is the which I said that we had this problem with angel tax, and that got sorted out. I think it's very important for the regulatory authorities to be clear on the compliances. Companies must meet those compliances, but we should have an easier framework for startups, and certainly the tax authorities need to have to my mind, a gentler way of dealing with startups because they don't have the ability to hire a lot of experts to help them because we don't want to discourage people from creating startups. So I would say that two things, and then there are genuine concerns that the government or ministries have. Uh, my only suggestion is let's use a scalpel and and try and address that without throwing the baby away with the bathwater. Today's regime is infinitely so much better. The government is so much more supportive than when we were doing our startups some decades ago. Uh, there's also access to government contracts, which didn't happen earlier. There is debt funding. There are several fund of funds which are there for startups. Today, defense, space, both those sectors have been opened up. So government has done a lot to make it work for startups, and I think there's no reason for startups to not succeed in this kind of environment. There may be some minor issues, as I said, which will always continue to be there. There's no perfect uh, environment anywhere in the world.
Definitely. Yeah. Yeah. I think we've run completely out of time, but one last question to all three of you. What would be your one top advice, not to startups, but to entrepreneurs who are listening and watching this episode? Uh, Rajneesh, do you want to start?
Learn to face the challenges because you are an entrepreneur and you have shown that entrepreneurship. The issues or irritants, if I may call it, they will be there, but you have to learn to overcome that and contribute to the progress of India and your own progress.
Great. Sushant?
No, I'll agree. I think there will be challenges and there will be things which will keep pivoting. My only advice to all the young startups, entrepreneurs would be to choose the right team. I think we always undermine the people you work with. Choose the right set of team. I think if you build a right team, it has more legs. Money, other support systems will keep evolving and will keep following. But if you have the right set of people to build the right business, I would urge a lot of entrepreneurs to put a lot more focus on team building and having the right set of people to guide you and manage your business and take it forward, to all the points that we covered during the course of the conversation today.
That's great. Yeah. Saurabh and you.
So I would say to all entrepreneurs that there has never been a better time in India than to do a startup. So please do come out and build the company that you want. But the only advice I have, don't do a startup because you think you'll get rich. That's a wrong reason. If you use that reason, you will never succeed. You should build a startup when you think you have a big idea. It should always be a big idea rather than a small one. It should be that you're solving a big problem, a big challenge that will change lives, that will change society, that will address a big crying need. And when you do that, understand that a startup journey is not easy. If you're not ready for a hard journey, don't start. So be resilient, don't give up. If you have the right idea, if you have the right time, and if you have the right value system, you will succeed. Money will come. It's happened to all of great entrepreneurs around the world, and it will happen to you.
That's great. Thanks so much, gentlemen, here. I'm sure this is a very insightful episode. We discussed everything from the decade and the trends that are shaping the next decade. And we also spoke about, what are some challenges that are emerging and how startups should view it. And we also ended with some great tips for new age entrepreneurs out there. Thanks a lot for spending time with us. Thanks a lot, everyone.
DBS Bank and Money Control present Small Business to Smart Business. Focus, ideate, innovate, enable.